From FXEmpire, this is Chris taking a look at the dollar yen. You can see we are banging up against pretty crucial resistance here, pulling back to the 200-day EMA, and this is going to be a crucial couple days because without going into the complexity of the bond markets and the S&P 500, if the S&P 500 rallies, it more often than not will work against the value of the Japanese yen. Not always. It just kind of depends on what's going on in some other auxiliary markets. But right now, that's the correlation. So if we can get a breakout in the S&P 500, we can break out here. If not, we may fall backwards. So we need to come up with a couple of levels to pay attention to. This candlestick here on Monday is my bottom. If we break down below there, I think we go looking towards the 50-day EMA, maybe even 107. Just kind of depending on whether that's a really panicked move or if it's just a grind lower. If we can break the breakout candle, or breakdown candle, I should say, from a few months back, then that opens the door to 110 and possibly even this gap. And then eventually maybe 100% Fibonacci retracement level, as typically once we break 61, that's what happens. The best thing to do in this type of situation is watch other markets. If stock markets are rallying, that's a good sign that this is going to go higher. If bonds are rallying, depending on how quickly they're rallying, that can help the U.S. dollar against the Japanese yen because of the yield differential, either working for it or against it. So a little complex, but at this point, you can see that we are certainly trying to make a move. You could even go so far as to say we're trying to form an inverted head and shoulders, a little sloppy, but it's a possibility, and that would lead you right back up here. So I do think that we're trying to break out, but this is going to be a big fight. We need some external help.